Okay, so we have a new year. Happy New Year to everybody. It's the year 2025. It's an interesting time because we have a new yearly candle formation. Okay, so let's do the analysis starting from the yearly chart and let's see what we got for this year. So, here on the DXY is where we'll start the dollar index. And here I plotted out the 2025 opening price and just annotating the 2023 high, right? So 2024 had a small retracement and then a big engulfing candle all the way up to 108, 108, 583. Okay, so let me just put this off here. And yeah, so we have a nice candle order block here on the 12 month. Okay, so as you can see, um, we came into the structural CB in 2017, came down to this yearly BC, and started expanding up. Okay, we weren't able to close above the yearly CB in 2022. 2023, somewhat of a consolidation and a down close candle as well. And 2024, we create this interesting order block. So, what am I anticipating now? Right, I am anticipating higher prices, um, basically lower prices for Euro, USD, anything with the symbol before the USD, and of course higher prices for most things with USD in the front of the name. Okay, so yeah, so we had this yearly R2F gap down here, but that did not get traded into. It was a breakaway gap, and we just expanded up. Okay, so let's see where we can possibly find a trade that may take us higher, or possibly a trade to take us lower. Although the year just started, so there's not um, maybe not too much in terms of taking a short, but we'll have a look. Okay, so it's the start of the year, so you do want to be cautious because we may get some accumulation or manipulation at the start of the year. So let's go down to the 11 month. Just to note that every single time frame resets at the start of the year, every single monthly time frame. Okay, so we get a new everything, new every monthly candle. Okay, so we get this breakaway gap here, and although there's a busy 11 month here, we may not trade um, into that, maybe yet, but we'll have a look for more clues, perhaps into consequent encroachment of this week, somewhere in there, right? Anyways, 11 month time frame. We go to the 10 month. Okay, we got this nice overall breaker here. Let me highlight a different color, blue. Okay, this I would call a breaker. So it adds more confluence to the time frames of us possibly hitting higher. We get that as well. 9 months, 8 months, 7 months, 6. Nothing too interesting. Okay, 4 months looks good. 3 months, we get this breaker here. 2 months, 1 month. All right, so we are over here now on January monthly candle. As you can see, we still have many months to go. And we do have a technical breakaway gap here, but we also came into a maybe probably OTE. Let's pop on the fib. Let's pop on a regular fib. Yeah, so we came all the way up to this Fibonacci level, 62%. In ICT terms, that's the optimal trade entry zone between 62 and 79. Technically 61.8, but I think it's splitting onions and um, splitting hairs. Okay, one of those terms, and it's essentially the Fibonacci golden ratio number, 61.8. And so we have this imbalance here on the monthly. Let's see how much of it we filled. Okay. Pretty much to the tick, and then we started retracing. Okay, so let's start to go down to the lower time frames. So I'm anticipating possibly higher prices, just for the dollar, coinciding with Trump being elected, just overall bullish dollar, right? And this quite turbulent times. The more global things happen, there'll be more people flying, seeking refuge in the US dollar, which may lead to higher prices. Okay, so let me remove this. So we go to the 3-week. Okay, 2-week. All right. So the 2-week we had that, which was very nice and led us to higher prices. So now we've this is also a 2-week gap besides the monthly gap. So we hit that pretty much to the top, and then now we're retracing. So we could actually come into this R2F gap over here. Okay, that could be quite interesting. We should not go lower, I think, than this area. So this part should be a stop loss, protected low. Okay, this area. Let's go to the weekly. Okay, yeah, it's getting a bit messy. All right, let me just hide these indicators. Not indicators. What am I saying? Yeah, we don't need the yearly opens in here. So refine weekly, 1 week, 2-day, 3-day. So there's a 2 and 3-day refined area where I see price possibly coming into. Okay, so 2-week. So let's go down to that time frame, 3-day, 2-day in here. It's basically a weekly gap as well. Okay, so the daily, yeah, it's over here. So we could see higher prices. We came into this daily gap, we started expanding up, but we hit a higher time frame upper threshold of a monthly CB and a 2-week CB as well, a structural CB, and also the OTE level 62%. So we could see a bigger retracement. Okay, down into a more structural area. So I'm still waiting. It's still early in the year. So let's look at other pairs in comparison of what we can expect. Most pairs look pretty nice. So we go to the euro dollar first because I trade the euro dollar a lot. Okay. So let's see what we got. Okay, let me hide these things. Okay. These lines here, excuse me. Okay. So very nice. So we have, immediately my eye catches this area, which is a bearish candle OB. Okay, on the 12-month. And I'll just write here, which candle OB 12-month. Okay, so this looks very nice for a continuation down. Down into where? I don't know. There's a very key level here. 1. Okay, big figure 1 that I may see price coming into or testing rather. There's definitely a target where if you're shorting, that would be where one should take a partials at that area at least, right? Because you could get quite a bounce at that figure. So let's go down the time frames. 10. Okay, on the 10 we have this what do you call it? We have this breaker over here. Okay, so yeah, we're still early in the monthly time frames, but let's look for anything that looks relatively interesting. This looks interesting for a continuation down, although we do have some equal highs there. Okay, yeah, all right, so let's look at this. Sorry, this it's the first time I've been analyzing since my time off for the year. Okay, so on the monthly, I have a monthly CB here and a 3-week BISI here, which I had as a target, and I'm glad it's coming to that. So it's going to be pulled into that, right? We have equal lows here, from here to here. I believe we're going to come into there before we see a possible retracement back into, let's say, a monthly SIBI with a structural breaker. Okay, so let's go down to the time frames to refine an entry. So I see this order block created here, and the order flow is still rather bearish. We haven't taken out this low yet, and I think we'll be drawn to that first before anything. Okay, so we had this small gap here, okay, on the weekly. All right, so I'm just going to annotate that, and I'm just going to try and keep it tidy by keeping it on the weekly time frames and lower. So yeah, so now we're on the weekly, and we have this 3-week busy as a draw on liquidity, right? So I'm following the PD arrays as far as I can go down. Again, 3 weeks. So let's start on the 3-week. I don't see an entry there on this time frame. Okay. Before coming into a higher time frame POI, structural PD array, or key level, we need to go down to lower time frames to find an entry, right? So we're not going to get, most likely not going to get a bounce all the way up here and then come down into that area. Okay, so let's have a look again on the lower time frame. So we just slowly go down the lower time frames, and I just noticed this, and I want to take note of that as well. This is an inversion on the 3 weeks as well. Okay, so now we have a new 3-week candle. Quite okay, 20 December. All right, so 1st January candle. We may come into there before coming lower. Okay, so it's an inversion. Okay, let me use this. Normally I use gray. All right, so we may come into this and then go lower like this. Pop, pop, pop. Okay, that's the analysis. Where's the trade, right? Where do we find a trade? We did have quite a big move down already. So yeah, it's interesting. Let's go to the monthly, and we did come into the monthly. We had this for the monthly. So we may stop there and we may move higher first. But I think we could come lower. And one other analysis you can do is you go to the futures chart and you look for the same thing. Is this it? Okay. So we see here. Sometimes on the futures chart, you get a liquidity run. It doesn't happen on the CFD charts that brokers use, right? So this did not take that as well. So keeping that in mind. Okay, so we could see something like this. So again, go to lower time frame. Is there a PD array? No. Most likely it's not going to. Let me just change the color. Most likely it's not going to break this high, right? Because we're following the PD arrays. Create this order block, trade it into that, move lower, move lower. Now we have an inversion gap here. Okay, so we go to the 1 week. 1 week we have that. All right, so quite possibly we do not break this high. Again, so just refining our possible areas where we move lower from without breaking it and moving higher, right? So we get a nice thick candle here. This is not too nice with this, we closed here, we opened here, and then, yeah, it's just a bit gappy. Let's go down to the lower time frames. Okay. Again, we had the same thing, quite nice, yes. 4-day, 3-day, 2-day, 2-day, it's gonna be 2 days here, 2 days not closed yet, and the daily is here. Okay. All right, so this is how I would do it, right? So we have the daily here. And take note of this area. Okay, always take note of these. Price usually likes to come and retest these areas. This is when conventional support and resistance strategies tend to work, right? We got a gap, we have this low, we have the draw on liquidity, so we have other contexts. We're not just looking, this was support, now it's resistance, because there's so many support and resistance levels here. There's just many different areas that uh, price breaks and then it retests and then it breaks through again and it goes up a bit. So we want to see where price wants to go. We want to be able to frame a trade. So it's quite likely to come into this area. Okay, fill a bit more of this gap and come into here. So let's go down to lower time frames and just gonna annotate this SIBI 1 day. Okay, now refining an area. Okay, and don't forget this 3-week gap up here. I'm not saying all the way up there, but let's look what's on the lower time frames. I'm not gonna put 20 hour. Go to the 12 hour. 12 hour here. We do have some kind of R2F gap there. If it starts to get closer, I'll keep an eye on it. So let's see. Okay, so there's not much structure being created here, right? It's just crawling up. Not much structure, not very strong. Okay, so sooner or later it's going to break through, I think. Okay, and we can see more of this on the lower time frames. Go look at that. It's not moves like this where you get a high, a lower, a low, a lower high, a lower low, a lower high, a lower low. You see this gap here, and you can see where price comes and touches this low. This is the low I'm interested in, and it could be in this gap up here. Okay, and this is what we have on the hourly. So at this, time frames like this, we can start looking at kill zones, things like that, and news events. Okay, so today, Monday, still relatively early. We're gonna have NFP this week, I believe, Wednesday, ADP, NFP, amongst other news. So I'm waiting for more information. I'm not gonna be jumping into a trade, and I'm still quite tired, and I had a bike accident recently, so not feeling that great. Okay, so 30. Very interesting though. Nice equal highs up here. This is liquidity likely going to be taken, and we may come up into take out this short-term high here and possibly into that zone, right? Let's go look back into that zone. Go to 12-hour R2F. You may not get that high, but when would one look for a trade? Okay, let's see how the daily closes. Do we get a daily closing below this and the willingness to not want to go higher? Close higher than this SIBI, right? We definitely do not want closing above. Okay, but let's see. We may spend a day or two in here because the next day, tomorrow, we have another 2-day candle as well. Okay, we just linger around here. We're going to have a 2-day, and then we may trade into that as well. Okay, so we got to keep track of the time frames that are forming. 3-day is not anytime soon. 4-day is soon, but we're not going to get a gap. Okay. However, I'm just going to annotate this because I think if we do come into this 4-day gap, we should move quite fast from it. Unless this analysis is completely wrong. And yeah. Okay. Something like that. Possibly 4-day wick into there. You got to see in the news, right? 4-day is yeah. Let's see. But I do think we'll be drawing to this area. We're pulling down to this area, and this 3-week. We may not trade all the way up, but we may do. So let's see. All right, so that's how I would analyze it, and finding a trade would be usually on a lower time frame where I can incorporate kill zones, news, stuff like that. Okay, and slowly narrow my focus down. So I'm playing on the daily, right? So I may go to the 8-hour, 6-hour. Do we have a SIBI being formed, a BISI becoming a inversion gap, or a SIBI, a candle breaker, candle order block forming to the downside? Then we can catch that and then ride that move, right? We don't have to catch a top because where's our stop loss, and how sure are we of this stop loss that we put in? Okay, So I mean, that's how I would do it anyway. That's my style. Lower prices, right? So let's go to the dollar CAD. Okay, it's interesting. All right. So as I was anticipating, there's some equal highs here, and we had equal highs on the lower time frame. I'll show you in a while. That I see as a draw on liquidity. We got this nice strong close, so we should come into here. I'm not saying exactly this deep. I'm saying a retracement and then push up. Sometimes we just push right up, right? But so we'll see. So we go down. I'm just gonna go straight down to the lower time frames. Okay, 11. Come down into here. Got 11-month R2F. It's quite nice. So this yearly candle should end bullish, right? So we were anticipating a power of 3 on the yearly candle based on this candle theory that I'm using, candle PD arrays. Okay, so what do I mean? Let's look at this. Let's look at these. Okay, let's look at something. Okay, this is a bearish order block. We come into here and we trade down. Okay, we trade down, but we end up a little bit higher, right? So and then we push down again. So this year, okay, this month, this 2-month candle ends lower, and then we push lower again. Okay, let's go straight to the 12-month. See if there's any. Yeah, we don't have anything to see in the 12-month. We got order block here, and we just push up. This bearish order block here. This candle here, we push down, and we get a down close for that time. So we should be anticipating an up close, and should be coming into this buy side liquidity over here. Okay, so that's the analysis. How the trade happens. Slowly go down the time frames. Slowly go down the time frames and wait. Okay, because I mean, if you can catch a good winner and you're on the right side of the market, you pinpoint where you are in price, you can make a lot of money if you have that kind of skill, right? Rather than okay, you got a positive edge, you win sometimes, you lose sometimes, but overall you make you have a 51% positive edge based on the system, which is mechanical, right? And then you never know when that edge is going to be negatively affected, right? So sometimes you have to wait. That's the market. You can't just go in and demand money, demand volatility. Price has to move to make money. You can't just say, you can't just you can't just be a good trader and expect it to. Always a good trader. You can make money anytime. No, that's not how it works. It's not poker. This is trading, and you need movement on the chart. Okay, I'm give an example of a year that barely moved. I guess this year was just quite a small movement for the year. And this one compared to some of the others where you get a lot bigger movement. Okay, so higher prices. Now let's go down. This is the yearly. This is 4-month. Yearly is relatively similar. Okay, 4-month was here. Then we got another 4-month here. So I'm just gonna narrow things down because I don't think we're gonna break this. We're gonna go up. So this low is protected as well. It's a lower low than this down candle. It's an extra confluence for me. Okay, 3-month, 2-month, 1-month. All right. All right. Let's see. It's 4-month. Like it's 3-week. I don't need this anymore. Okay. See this magnet up here? It's pulling price. That's the power of emojis. Pulls price. Okay, 3 weeks. This 3 weeks looking interesting. It looks like we want to come into here. This would mean higher prices, not necessarily, but higher prices, possibly for the US dollar. No, for the euro, which is in concert with what we were expecting, right? A little bit more of a retracement rather than price dropping now. Okay, so expect some manipulation this week, bit of tomfoolery, and I'm just going to annotate this as 3-week busy threshold. Okay, I don't want to put a whole gap there. Just getting too many gaps on the chart. Okay, 2-week. So I can refine it to 2-week now. Okay, 1 week. So we got this 1 week that traded here, traded up, did not take out this high. Okay, and this relative equal highs here, I'm going to call this buy side liquidity. Okay, let's go to the 4-day, 3-day, 2-day. Okay, go back to the weekly. Okay, I'm going to draw a box so I can easily see where it is. Okay, I'll just remove this. And then what did I see? 3-day, 2-day. All right, so we have a 2-day gap here as a refined area and a larger one down here as well. Is there anything to the left to support price? It's just this overall area. I can't pinpoint exactly where. We got a high there on this level. And this overall 3-week, you can annotate the line if you want. It's not too crucial because you get different time frame, different consequent encroachments. But it's definitely this one, so pay attention to that. And look at this consolidation. Okay, 3 hours here. Other things I take note of: trend lines. Okay, it's putting one here. It's following this. Okay, came up this third Friday, boom, and then Sunday, it's Monday, just crashing all the way down. What do we see here? It's equal lows below here. Okay, so now we're refining it. We have the higher time frame candle that we are interested in. This 3-week gap here. We refined it lower and lower and lower. So now we're down to this lower time frame. We're looking at structure. Okay, this kind of move up. One very common thing I see is not this trend line, but basically this kind of order block here. So price to come down a little bit below it or something like that, and then that's something that's quite common. Looks something like boom, and then this part is not so important, but it comes just below there, and then a continuation up if that's where it's supposed to be. That's where it's supposed to go. Continue up. Okay, not just based on this pattern. If I just have this pattern, I can't say, oh yeah, it's that pattern, and now we buy here. That's not having context. Okay, it's not working your way down the time frames using this method. Okay, so one could possibly short here, but I'm not too interested in that. I'd like to wait for continuation on the dollar index, and this one should continue up as well. Okay, so this kind of move here, you see this order block here after the big move, maybe come below it, something like that, and then that's why I drew this orange line. Okay, sell side here, buy side there. And I'm just going to show you this same kind of thing that was maybe on the monthly time frame. You can see that kind of stuff on gold actually. Let me go to gold quickly. Yeah, you see it here, right? We create this double top here. Come all the way down, take out the equal lows, and then we come up. Take out this high a bit, retrace, but that's not enough power. Go once, go up. So after that, boom and boom and boom, and just kept spooling up. Okay, so I'm gonna leave it at that. So this video is not too long, but yeah, I hope that provided some insight into what I'm looking for and how I look for it. Okay, for other pairs, yeah, you can do your own analysis based on that, and you can find more confluences. New Zealand dollar. Look at these equal lows. Look at this down candle. Okay, likely to go lower. What does that mean? Stronger US dollar as well. Yeah. Okay, so it could be pushing down, and then we can use our intuition as well. See this low and see the price pushing down once, pushing down twice, pushing down here. Likely gonna come and take out this low as well. Okay, so you can just kind of judge by how price is pushing down, making a low, tracing, making a low, and it just keeps pushing down. It wants to push down, and because it wants to push down so much, it wants to reach liquidity, and there's a lot of liquidity lying below this significant low because it's a very obvious low, right? It's a very obvious low. And besides that, this is a monthly time frame. I don't need to say where price. There's 1,600. Down here it's like 600 pips. I don't need to know where price wants to go here. I can say that wants to go there. Now I got to find an entry. Find it. So it shouldn't break this high. Go to the month. Probably get retracement and then annotate things like this low. Get retracement up into there. Okay. So we see us slowing down a bit here. There's no PD arrays here. If I go to the daily, I bet I see an inversion gap. Or maybe a balanced price range. Maybe a disrespected inversion, disrespected CB, right? Let's see. Okay, no CB here. Maybe on the 12 hour. How about a 2-day? Yeah, no CB there, but there'll definitely be a CB somewhere that's disrespected, I think. Maybe this one. This is what usually happens when price starts to slow down, right? Comes into here, takes out a low. First target is always external range liquidity and start expanding up. So we may see like higher prices for now, as in lower prices a little bit for dollar CAD, which can in turn mean a bit of higher prices, and then we can judge. Okay, first things first, we'll measure this trend line here. Price possibly coming into that. It's relative equal highs. Daily trade it into it, but so a PD array, trade it into once, right? Just trade it into it and left. That's gone, done. I want to see a different PD array. So that's on the 2-day up here. Okay, so there's no, let's say there was a CB here. There's no CB here, all right, because of this candle. But we do have this wick. All right, so 14 hours. Let's see what happens. Okay, you could trade back into it later after this. If this candle closes higher, you could trade into that later. Yeah, see what happens. All right, that's it. That's it for this video. Good luck with your analysis and your trading for this year. Remember to use sound risk management. Rely on compounding your account. Rely on consistency in your trading. That's what matters, right? I don't know if any of you work out or exercise at the gym or have tried to for any extended period of time. If you did, you'd know that consistency is the most important thing, right? Doesn't matter how hard you go at the gym, spending whether you do 2-3 hours there at one time lifting your heaviest weights. What matters is consistently going, let's say 3 times a week, consistently, week in, week out, month in, month out, year in, year out, right? So many people have this New Year's resolution. They set such big goals, for example, in fitness. Okay, I'm gonna get six-pack and get muscular. First of all, they're very vague goals, and they're very big goals, right? For example, in trading, you have the goal to be financially sufficient, or even very, or even wealthy and rich, right? But how are you going to get there? Only through consistency. You can't jump to that area, to that level, without consistency and trading. With sound risk management, and just allowing yourself to gain that experience, make mistakes, and learn, and not being destroyed because of over leveraging or feeling that you're not good enough, that you got to make it now, that kind of thing. So yeah, good luck, and catch you later. Bye.